Welcome to the Capital News. I am your host, Alex Kreitis. Today is June 11th, 2019. Thank you so much for joining me. So what took place in the markets today? Well, the S&P closed down 1 point, just 1 point down. The Dow closed down 14 points. The NASDAQ lost 60 cents. Yes, 60 cents. The Russell 2000, the small cap index, closed down 4.5 points. The Dow Jones Transports, they lost 0.3 percentage points for the day. And the New York Stock Exchange inched up just slightly and gained 12 points for the day. So nothing drastic. Today's episode is titled Trump Holds Up the Trade Deal. And of course, we're talking about the trade deal, that being between the United States and China. And we're going to get to that later today. But oil now sits at $52.55. That's for WTI. Meanwhile, Brent is at $61.27, both down about 1.5 percentage points for the day. Gold now sits at $1,336 an ounce. Silver still remains below $15 and is now trading at $14.78. Again, to my precious metals investors out there, buy low, sell high. That's all I can tell you. U.S. 10-year Treasury down slightly, very, very slightly, but now sits at 2.14%, 2.14% on Uncle Sam's 10-year Treasury. And then we have the VIX, the volatility index, up very slightly, but is sitting at $15.99. So the markets, I think, are in a state of flux. You know, we had the episode about a week and a half ago. You know, the stock markets are torn. They don't know what to do. They should know what to do. They should revert to fair value. They should seek fair value. But of course, we are clinging to hope that the president is going to send out a tweet or is going to make a statement or is going to have one of his lackeys send out a tweet or make a statement saying that we have a deal with China or that we are back to the trade negotiation table. And that is just going to lift the animal spirits, if you will, within the stock market. And we may very well make new highs. Based off of what, I have no idea, but that's what the markets are looking for. This is the irrationality of the markets. Because we're talking about, yes, the two largest economies in the world, but the dollar amounts do not amount to that type of reaction. It is complete insanity. Complete insanity. But that's par for the course, because we've had many conversations here about extreme valuations, how we have companies, Microsoft, Apple, Google, Amazon, that are nearing the $1 trillion mark. $1 trillion. I mean, we throw these words around like it's nothing anymore. You know, $1 trillion deficit, man, no problem. $1 trillion deficits as far as the eye can see, yeah, no problem. You know, it was only a decade ago when people were saying, oh my goodness, $700 billion for TARP, that's a lot of money. Now $700 billion is like a drop in the bucket because that has a B in front of it, billion. We're talking trillions here. People don't even understand what that means. I'm not even sitting here telling you that I understand what $1 trillion is. I mean, if you put $1 trillion in front of you, you couldn't see. That's how much money that would be in front of you. You'd never be able to spend it all. You could try, you couldn't do it. You'd never be able to enjoy it, anything that you bought, because you'd have to spend your entire waking day trying to spend that money. That's how much $1 trillion is. But our government goes through it like it's water, like it's nothing. And, you know, of course, we bring in about $3, we spend $4 trillion. That's nothing. But we have these companies that are near $1 trillion. $1 trillion. You think that's sustainable? Maybe you do, and that's fine. And I'm sure some of you out there could make the argument that it is sustainable. I do not believe that it is. I just simply do not believe that it is, because we put some perspective behind it, which is what I always try to do here at the Capital News on this podcast. And so we went down the list of some of the largest countries in the world by GDP. And some very well-known countries, Australia, Canada, you know, some big names here, are only slightly over $1 trillion when it comes to GDP. Yet somehow, it's perfectly okay that Microsoft, Apple, Amazon, Google are $1 trillion companies. You think this is sustainable. I do not. But time will tell. I think these companies, and not just them, but the broader markets as a whole are going to decline 40%, probably 50%. And I would not be surprised if it's more than that. Again, I have been calling for these markets to revert to a value we haven't seen since 2016, which would correspond to about a 40% decline, which again is in agreement with Ray Dalio and Company, the world's largest hedge fund, with Bridgewater Associates, and that was something we discussed here. And of course, I've been saying this before that report came out. Doesn't mean that Bridgewater Associates wasn't saying something privately within the firm, but nevertheless, publicly it was not stated. But it has been a topic that we have been discussing here for quite a while and stressing as well, because it is important. This is where the tide turns. We're talking about U.S. corporate profit margins peaking, which means if they've peaked, there's only one way for them to go, down. So if they go down, what are we going to do? Because not only are you going to have these margins peaking, which are supposed to be sort of the mother's milk of stock prices, but now you have a whole bunch of debt coming due, trillions and trillions of dollars, because we have $10 trillion in corporate debt. Bonds, commercial industrial loans, leveraged loans, which is a loan on top of a loan. I mean, this stuff, you cannot make this stuff up. And of course, you have the Federal Reserve come out and make mention of these things and say, well, it could be a problem, but we think it's contained. That's pretty much exactly what Ben Bernanke, the former chairman of the Federal Reserve, said in 2006, 2007 when it came to the subprime crisis. It could be, but, it'll be contained. Yeah, it was contained. Good job there, Ben. He had no idea what he was talking about. His solution was disastrous. It was fraudulent. And of course, I'm talking about zero interest rate policy for nearly a decade and quantitative easing, which wasn't done just once, not twice, but 3 times. And now we have the tweeter-in-chief, President Donald J. Trump, out there calling for a 4th round, which, I'm really getting sick and tired of these antics and these calls for this to happen from this president, because I voted for this president in large part because of the comments he made attacking the Federal Reserve, and rightly so, when he was candidate Donald J. Trump. Now he's president. He wants lower interest rates and another round of quantitative easing. That's a crime against the American people, especially the middle class, which is mainstream America, which is what this program is primarily concerned with. And again, we're not here talking about class warfare, but when things are done fraudulently, which is what they have been done, when you're talking about the Federal Reserve and a whole bunch of governmental antics with it, I got a problem with that. And so I voice that opinion here on this podcast almost on a daily basis because it is that important. You have to understand this. If you do not understand this, you're not going to understand the solutions, which is why I'm telling you we have to end the Federal Reserve and why we have to abolish the federal income tax. Those 2 things will really get it kickstarted. Believe me when I tell you. Is it going to be bumpy for a little bit? Probably. But we're going to be so much better off on the other side, it's not even funny. Because you have the middle class subsidizing the 1%ers. Because that's a wealth transfer. That's how it works. That's the game that was played, because we were hoping for this trickle-down effect. Right, the wealth effect. Well, if we can inflate asset prices, this was what was said, by the way. This isn't secret. You don't have to dive into a 1,000-page report somewhere that only nerds and idiots, with no time would, take the time to read. No. This was actually said publicly. This is what they wanted. They wanted financial assets to increase. They wanted the upper echelons of society to benefit in the hopes that once they became even wealthier and wealthier, that they would start to drop their breadcrumbs from the table so that middle-class America could actually make a living. Well, of course, that doesn't work. That doesn't work that way. And it hasn't worked for a decade. It was started with Ben Bernanke, it was continued with Janet Yellen, and now you got Jerome Powell. And of course, Jerome Powell tried switching it. He said, okay, well, we've been broadcasting for quite a while that we're going to quote-unquote normalize interest rates, that we're going to start increasing them a little bit. And, they throw in a handful of rate increases. And now you have the stock market back in the 4th quarter of 2018 throw a hissy fit. And he said, no, well, now it's going to be wait and see. You had Donald Trump throw a hissy fit. And now he's even done a 180, again, attacking the Federal Reserve when he was a candidate. Now he's the president. Now he wants the Federal Reserve to lower interest rates and embark on quantitative easing number 4. But of course, he's still doing it in such a way where he's attacking the Federal Reserve. He's just now calling on policies that screw over the American people. So this is something that is very upsetting and troubling to me because, again, this is one of the main reasons I voted for the president. Because he said, again, rightly so, that the Federal Reserve was causing problems. Now he wants them to do the same policies that caused the problems. That's insanity. So I'm having a tough time wanting to vote for this president for a second term. Now, that doesn't mean I'm going to vote for a Democrat because none of them know what the hell they're talking about. But, he's not just going to get it because he's the quote-unquote lesser of two evils. That's not how it's supposed to work. He has the ability to really attack the Federal Reserve head on from a standpoint of calling them out as the fraud that they are. I mean, why is the Federal Reserve getting involved to the degree that they are? And that's something we're going to talk about here, because I do, before we get back to the Trump holds up the trade deal and how this all comes together with the Federal Reserve and a whole bunch of anticipation from the markets and why we're sort of in this state of flux, because the markets are split between, well, do we cling to this strategy of hope, which of course is a terrible strategy, or do we look at all of this data that we talk about here on a daily basis that is just deteriorating at every single level? And now they're trying to say, well, do we have to go to fair value because we love this party? We love this 10-year party that's just been going on. Everything just goes up, up, and up. Maybe we get a little bit of pullback here, we get another pullback there, but that's just a buying opportunity to go up and up again. Are they starting to smell the roses? Are they understanding reality ain't as pretty as the way that the White House wants to spin it? Are they starting to understand this? I hope so. And not because I want this economy to crash and burn, but because it's the job of a well-functioning marketplace to find fair value. And because we have all of this fraud taking place at the government, at the Federal Reserve, there is a whole maelstrom of malinvestment that is throughout the entirety of this system. Because this is what happens when you have easy money. When you have money for nothing, this is what people do. They say, oh, it costs me nothing to borrow this money, so I'm going to make risks that I otherwise never would have made. You think everybody made the right decision in that? There's no way. Just let history be your guide. So that's why we're going to have an extremely, extremely rude awakening, because people are not prepared for this, because nobody is discussing this. If you turn on Fox News, especially when you listen to the commentary, Donald Trump is the savior of the United States of America. He can do no wrong. He can do no wrong whatsoever. Nobody's going to question him. Sean Hannity, Laura Ingraham, they are not going to question Donald J. Trump. They're not going to. And that's why they get so many interviews from Donald J. Trump, because they don't question him. They just kneel at the altar of Donald J. Trump. That is very much akin to what many on NBC, MSNBC did to Barack Obama. It wasn't right for them to do it. It's not right for the commentators on Fox to do it to Trump. On the other hand, you have the left-wing media, all of them, who come out and are so anti-Trump, it's not even funny. However, they do not talk about the economy. They do not talk about the topics that we talk about here on a daily basis. Instead, they want to impeach him. Instead, they want to stick to this Bob Mueller script. There's nothing there. Nothing's going to happen with it. Maybe it'll rise to some sort of impeachment level after one of these many investigations finally wrap up, which who knows when these investigations are going to wrap up. Jerry Nadler, Maxine Waters, Adam Schiff, Elijah Cummings, Nancy Pelosi, Chuck Schumer. I mean, who knows when and if they're ever going to end? Will there be an impeachment process? Of course, we know that Nancy probably doesn't want to go down that route because it will destroy the country and it'll give the president a battle he wants to have with the Democrats. That they do nothing, they're obstructionists, and now they want to impeach me. By the time this all got done, it would basically be the presidential election. It would be November of 2020. I think Nancy Pelosi just wants to allow the Democratic contenders to go out there and say, okay, we're going to make our case. Here's who Donald Trump is. Here's what he's done. Here's what he hasn't done. And here's what we're going to do. Now, are the Democrats going to have a viable message? I don't think that they will, because I think they're going to most likely nominate a lunatic. Whether that's crazy Joe Biden, whether that's crazy Bernie Sanders, whether that's Pocahontas, Spartacus, Kamala Harris, these people don't know what they're talking about. They don't know what they're doing. So this is why I'm still saying that the Donald is most likely going to win re-election. Okay? But let's get back to some of these other economic stories here. Okay? So yesterday I didn't have the time to get to lumber prices, copper, and aluminum. Some of the things that we are paying attention to as forward indicators. And of course, oil is also a part of that list. And so is the Dow Jones Transports, which again was down 0.3 percentage points for the day. But lumber was actually on quite the rally today and gained about 6 percentage points. I think this is probably on the back of a lot of the stimulus measures that have just been announced coming out of China. So there's another round of stimulus measures coming out where basically they're saying to their states and provinces, you know what, if you have the capital somewhere, you can go ahead and stimulate the economy through more infrastructure. This is terrible policy, but this is what you expect from state-run communists. So this is par for the course. They are grasping at air. That economy is in not good shape. Believe me when I tell you. Believe me when I tell you. And the ripple effects will be felt the world over, whether there's a trade deal or not. The trade deal, if one is even hatched up, is going to be a Band-Aid on a bullet wound. Believe me, okay? China is not in good shape. The United States is not in good shape. The European Union is not in good shape. Australia is not in good shape. South Korea is not in good shape. Canada is not in good shape. Okay, Japan is not in good shape. That's it, folks. We're not going to be saved by Africa. We're not going to be saved by Latin America because we can go through those countries too, and we can, just count off their problems as well. So there's nowhere where anybody is going to be quote-unquote saved. This is why markets just have to find fair value. There's nothing wrong with this. Have an article on this. Why do we fear recessions? Check it out on thecapitalnews.com. It's still there. It's archived. You can find it. Read it. Think about that question. Why do we fear recessions? We're getting rid of the waste and the malinvestment. That's a good thing. If you're sick, you're supposed to get rid of the virus of the disease. Are you going to suffer a little bit in the meantime? Yeah, you might, depending on what type of medicine you have to take and this, that, and the other. But guess what? You come out better on the other side. That's the same thing that needs to take place here, except nobody wants to feel the pain. Nobody wants to go through it. I understand that. But that is not an excuse to continue with these fraudulent policies from the Federal Reserve, other central banks around the world, and from governments the world over. Okay? So if we're looking at lumber, I attribute a lot of that, at least right now in the interim, to more stimulus measures coming out of China. However, we saw a softening in the copper market. Copper was down just slightly a little bit today. And aluminum was up slightly, but is still at multi-year lows. Okay, the last time we saw these lows in the price of aluminum was back in 2017, but that was actually when it was on the upswing because we saw a deterioration in the price of aluminum back throughout 2015 and throughout 2016, and then started to finally see a little bit of recovery through 2017, but now we are again back to the downside and are trading at $1,775 for aluminum. So we're going to keep our eye on that because if these are leading indicators, and of course going back to oil and the Dow Jones Transports and even the Russell 2000, because those are the small cap companies, those are the American companies with less exposure, let's say, to the rest of the world. This is sort of more of the inside baseball stuff. Well, where are things likely to be headed? Well, these things are rolling over. These things are slowing down. So these prices are at levels we saw in the third quarter and fourth quarter of 2018, and we know what happened in the stock markets and other markets during that time period. So is this something to be prepared for? Now, it doesn't mean that this is set in stone, that we are going to have another correction that is going to be 10% or 20% or even more. But given everything else that we're looking at, it seems more and more likely when we put more and more of these pieces of the economic puzzle together that we are going to see another drastic leg to the downside. How quickly is a question. And that's why you always have to be prepared. That's why you have to be diversified. That's why you can, if you have the time horizon, you remain long. Not entirely. You can build some cash. Maybe you have some short positions somewhere where you can be nimble if you have to get in and out of them. So, buy some precious metals. We talk about that. Be diversified. Have a plan. Be prepared. That's what it's all about. Have this information at your fingertips because this type of information that we talk about here on a daily basis is not discussed at length or at all on the political mainstream media and rarely, if at all, on the financial mainstream media. Yeah, you're going to get some bears out there who talk about it. Yeah, you're going to get some smart analysts out there who talk about these finer points. But most of the time, it's just, yeah, man, it's a party. Come on. The Federal Reserve is going to continue printing money. Yeah, we're going to probably get a trade deal. Everything's fine. That's not fundamental. Those aren't fundamental issues at all. That's fraud. Those are headlines. That's not fundamental, okay? Where's the beef? So now we have Donald Trump, the president, coming out and saying, okay, China really wants to make a deal, badly. This is his words, badly wants to make a deal, okay? Because their economy, according to him, is getting decimated, and they have to make a deal. They want to make a deal. Now, of course, we were told only a couple months ago in May, or last month in May, that China left the trade table. They walked away from the negotiations. They don't want to do it. Now we're being told that Trump is holding up the trade deal. And now we're not going to know what happens until at least probably the G20 meeting, which takes place at the end of this month here in June. And of course, we talked briefly yesterday that the president is once again threatening to increase tariffs on China if he does not meet with President Xi of China at the G20 meeting. Now, we don't even know for certain if President Xi is going to make the trip to Japan for the G20 meeting. So I would have to assume if he does not go to the G20 meeting, that Donald Trump by default is going to have to increase tariffs. And what an interesting game of chicken or game theory that would be if President Xi just simply says, you know what, we're going to see how serious this president is. We're going to see what he's going to do, because he would have to do it. This is basically saying, well, if you're going to threaten somebody and say, I'm going to break your legs, well, if you do something and they do it, you kind of got to break their legs. So if President Xi does not show up to G20, or if he does show up but doesn't meet with Donald Trump, well, then Donald Trump is going to have to put tariffs on additional Chinese goods. He's going to have to do it. He's going to have to up them. So what do you think is going to happen to the stock market if that happens? It's going to be a huge sell-off. With what end in sight? I don't know. It's an interesting question, isn't it? I mean, how's he going to stop the bleeding? Who's he going to blame for that one? Because he's taking responsibility for this right now, which is interesting as I sit here think about it, because what does that mean? Is he sure that a deal is going to be made? Is a deal already made? Remember, I talked about this several weeks ago. I said, don't be surprised if a deal has already been struck and we're somehow playing this game of theater here. Because it's interesting when you have the president come out and saying, I'm holding this up. Last month, it was the Chinese who walked away. Now he's holding it up. When was the last time the Chinese were here with their trade delegation? When was the last time Steven Mnuchin and Lighthizer went over to Beijing? I mean, it's been a while. And of course, we increased our tariffs. The Chinese responded in kind and increased theirs. And the rhetoric is going back and forth. President Trump wants to play the strong man. President Xi wants to play the strong man. Basically telling the Chinese people, dig in, get ready for the long haul. We're not here for the short term. We're here for the long term. And China first. We're going to do what we got to do. So in light of what we've also been discussing with this Mexican standoff, with those tariffs, it now throws a wrench, I think, in these trade negotiations, because how is President Xi and Beijing going to view the tactics of President Trump? We signed or came to an agreement with the USMCA, but that wasn't enough, because there was something waiting in the wings that caused the president to say, I'm going to increase tariffs on Mexican goods coming into the United States. What is President Xi and Beijing going to think? If we come back to the table and agree to whatever they were supposedly agreed to before they walked away, and we have this quote-unquote fantastic deal, who's to say the president, Donald Trump, isn't going to say, well, wait a minute, there's something else, maybe I forgot this, or something else happens down the road, and you know what, I'm going to slap more tariffs on you unless you come back to the table. I mean, you think President Xi and the strong men advocates, if you will, in Beijing are just going to sit there and say, okay, we're going to let the president of the United States get away with this? I don't think so. I don't think so. Now, it'll be interesting to see. I think the Chinese economy is a lot more fragile than people want to admit. But guess what? So is the economy in the United States. You just happen to have a showman in Donald Trump who gets out there and has the bravado and puts on a good show and makes it seem like everything's A-OK because you had a 3.2% reading in Q1 GDP. You got a 3.6% headline unemployment rate, the lowest in 49, 50 years. You have the demographics looking good, low unemployment for women, for blacks, for Hispanics, for Asians, everybody across the board, except, of course, for, white males. But nevertheless, that has been par for the course for the past several years. And, of course, that is President Trump's base. So he sort of gets to win everywhere on that political messaging, if you will. But nevertheless, we have the president himself claiming that he is holding up the trade deal. Now, interesting, Interestingly, today we had Larry Kudlow, our buddy Larry Kudlow. I was hoping, of course, that he was not floating or swimming in the Potomac, and he wasn't. We saw him in the White House a couple weeks ago, and we mentioned that. But, of course, he wasn't saying much. But I guess he got the go-ahead from the president to go back out there and start talking to the mainstream media. And he was on CNBC again today, and, of course, he was talking about the deal between the United States and China. And, of course, everything's fine and fantastic, and we're probably going to get something, and Donald Trump is most likely going to meet with President Xi, and they'll hash out all of these disagreements, and everything's just going to be fine. And you would expect that the market would have rallied. But that's not the case. I mean, the market was up and down today, nothing spectacular. Again, it was, mediocre losses throughout. So is this starting to fade? Or the market's starting to say, you know what, my goodness, where's the beef? Maybe they're finally getting sick and tired of the president and his lackeys coming out and talking to the financial mainstream media, trying to talk up the markets. I mean, I've been tired of this for months now. Maybe the markets are finally catching up and they're getting sick and tired of it too. Because the other thing that these markets are clinging to is that the Federal Reserve is going to come back to the rescue and lower interest rates. At least lower interest rates. If not, embark on another round of quantitative easing. Now, they're not supposed to embark on another round of quantitative easing at least until September, because that's when quantitative tightening is supposed to end. Okay? And of course, it was quantitative tightening to the tune of $50 billion a month. Now, I do believe it has been reduced slightly. So that's something to keep an eye on, because maybe they're going to say, because the Federal Reserve has a meeting this month in the not too distant future. I think maybe the 18th and 19th, if I remember correctly. So we're going to have to see here if the Federal Reserve acts in the month of June. They're expected to act and cut interest rates in the month of July, and most definitely by September and December of this year. Like 100%, that's what the markets are anticipating, that's what they're pricing in. That doesn't necessarily mean that the Federal Reserve is going to do it, but if history is any guide, that's what the Federal Reserve does. It takes its marching orders from the babies throwing their hissy fit on Wall Street. The crackheads want their hit of crack, and they're going to get it, most likely from the Federal Reserve. The only question is when and to what degree. Again, these are fraudulent criminal policies perpetrated on the American people that the president said was a fraud, basically, when he was candidate. Now he's the president, and he wants the Federal Reserve to cut interest rates and to embark on another round of quantitative easing. That in and of itself is a crime, in my opinion. This is disgusting if you understand the mechanisms of this. So, again, I am beyond words with how fed up I am with how the president is calling for these types of policies to once again be enacted. I understand what's likely to transpire as a result. It's not going to be pretty, but guess what? If they continue with these policies, it ain't going to be pretty either. And there's going to be a whole bunch of more distortions because of it. At least my way of ending the Fed, getting rid of the federal income tax, you're going to start solving some problems. Okay? It's not going to happen overnight. But guess what? We're going to be a hell of a lot better on the other side of this coin. Doing it this way, more easy money, more counterfeit cash just flowing through the hands of everybody and their mother, that ain't going to solve a damn thing. Believe me when I tell you. It's just going to be a Band-Aid on a bullet wound. People are going to think they're high, they're happy, but they're not. They're going to come crashing down, and it's going to be a nasty hangover. No ifs, ands, or buts about it. So we got to pay attention to this, because it seems, at least from today's statements from the president and Larry Kudlow, that they are starting to lose some of their steam, some of their weight. And again, this goes to what we always talk about here with the laws of diminishing marginal returns. We're just not buying it anymore. It's just enough's enough. And now, and this is the interesting thing too, before I let you guys go. We had one heck of a run-up last week, and we talked about this yesterday in the stock market. One of the best weeks, if not the best week of the entire year. And of course, the President Trump tweeted about that. Didn't want to talk about the abysmal jobs report of only 75,000 jobs being created in the month of May, but he did, of course, want to talk about the great performance in the Dow Jones Industrial Average, or the best week in a year, okay, through 2019. Of course, he cherry picks what he wants to talk about. Had it been 275,000 jobs created in the month of May, we most definitely would have heard about it. But of course, that wasn't the case, so we didn't hear about it. So the president is very picky with the information that he cherry picks. And of course, that isn't unique to this president. That's what they all do. But of course, we were hoping for somebody different in this president to be a little bit more straightforward with the American people, but we didn't get that. So one of the reasons why we had such a run-up was because there was so much hope, again, hope, that the Federal Reserve was going to cut interest rates. And one of the reasons why the markets were anticipating a Fed rate cut was because the president was once again threatening tariffs on Mexico. Okay? Well, that's been alleviated. So those are gone. Those are indefinitely suspended. That's what we're told. And of course, we have the secret deal. The fantastic secret deal. We talked about that on episode 81A, the political podcast today. So be sure to check that out as well. So we have these secret deals, but now that's at least indefinitely suspended, those tariffs. So why would the Federal Reserve have to come rescue us from tariffs that are not going to go into effect, right? So now the markets are sort of what's going on? I mean, do we need that? Because what happens if there is a trade deal miraculously, or we go back to the trade negotiation table following the G20 summit? Will the Federal Reserve have to act? Why? If things are going to be fantastic, we got a 3.2% Q1 GDP figure. We have 3.6% unemployment. We have low inflation. Why would they have to cut interest rates? Why would they have to embark on another round of quantitative easing? They have fulfilled their dual mandate of full employment and stable prices. It's not their mandate. It's not in their charter to prop up financial assets. That's not what they're supposed to do. They're not here to bail out Wall Street. They're not here to bail out anybody. They're here to set monetary policy and allow the markets to fluctuate as so. So these are serious questions that we have to ponder, because if there is some sort of deal that is struck between the United States and China, and I'm not anticipating that there's going to be one, especially not anytime soon, but if there is, then why would the Federal Reserve have to cut interest rates? What type of temper tantrum are we going to see? And something else we're going to have to talk about tomorrow, because the president is once again out there talking about he wants a lower U.S. dollar. So he wants the price of all of your goods to go up, because that's what that means. You're going to have to reach into your pocket deeper and deeper. Most of us are already struggling as it is, living paycheck to paycheck. People do not have savings, unfortunately. People do not have retirement savings. They cannot come up with $400 cash in the event of an emergency. Yet the president wants a weaker dollar, which is going to make all of your goods more and more expensive. Can't make this stuff up, folks. But stay tuned, because it's our job to stay on top of it, and we most definitely will. This is the Capital News. I am Alex Karitis. Godspeed.